Boy, that time flies when you're having fun. Welcome back, guys and gals. Joseph James here. It is Tuesday evening. It's January 15th, and it's time for your nightly newsletter. You know, I help new traders just like you earn consistent profits using a simple 3-step strategy that we trade together every day in our trade room. And tonight, my goal is to find the most reliable trading opportunities setting up for tomorrow, Wednesday's trading session. And we're going to cover crude oil. We got the S&P, I got the Nasdaq, the gold, and we'll wrap up tonight on that mighty euro. Starting off tonight on oil, oil has 3 big clues on the chart. I've got a bull momentum, a trading range, and of course I have a hidden channel. My goal tomorrow is to wrap together the low of that range along with that hidden channel for some buying opportunities off of that low. But we got some big news in the calendar, so we're going to have to trade around that news tomorrow. We'll talk about that in much more detail in just a moment. How about the S&P, the Emini? Very similar to oil, right? We got a bull bias here, get a trading range, and we get a channel on the chart tonight. But the big clue right now on this E-mini is this little hidden trend line coming in here. And I'd like to grab the pendulum swing back to that low and get a chance to buy off of that low on the ES tomorrow morning. Nasdaq is looking very similar to the S&P, but there's one big difference, and that difference is this wide channel. Got a bull market on the Nasdaq. We're right at the top of that trading range, and I would love to grab that big wide channel and buy off of that low. That'll be a great spot to look for longs tomorrow morning. We're going to break that down in just a moment. Over on gold here, gold is holding strong right now. We get that range bound market on gold. I'm going to try to use that pendulum swing to buy low, sell high, avoid that middle, and I got a key trend line coming down here overhead. We're going to put that plan together here on gold in just a moment. And then of course, I think the chart of the day today, I think the big chart tonight is that mighty euro, right? Euro is bearish right now, but there's one big clue. We got 3 big clues, but one really big clue on this chart, which tells me that I think we might be better off looking for a buy tomorrow. And I got a great plan on the best way to trigger that reversal trade going back to that big round number. So make sure you stay tuned, right, for all those charts tonight on our nightly newsletter. Before we jump into our charts tonight, though, I do need to remind you, don't miss another video. While you're here, make sure you subscribe to our YouTube channel. And if you want to make sure you never miss a great video here, head over to the blog at sidewaysmarkets.com. All I need is your name, your email address, and then hit that subscribe now button, and I'll shoot you an email every time I publish something new. And don't forget, tomorrow morning, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time. If you can't be there with me tomorrow, that's okay. The next best thing, right below the video tonight on our blog, you'll see a big button to download all the charts from tonight's video. If you can't be there with me tomorrow, the next best thing, of course, is to grab all those charts. Grab those charts right below the video tonight on our blog. I'll put all the links in the description of the YouTube video. That way you're ready for tomorrow. And then don't forget, if you have any questions about anything covered in tonight's video, drop me a comment in the comment section below. Call that toll-free phone number in the upper right-hand corner. Use that live support tool. I'm always here standing by to answer all your questions. And again, if you like what you see, if you get value from this YouTube channel, it would mean a lot to me if you subscribe. And when you subscribe, make sure you hit that bell icon so you always get notified of a brand new video. All right, it is great to be with you guys and gals. Well, the rain stopped a little bit. I think a little bit. Yeah, it might be raining again here. Just in time to dry it a little bit before the rain starts back up again. You know, here in Los Angeles, it starts raining, so people are freaking out here in LA. It's good for us, though. The hills here in LA right now are all green and lush. It really is a beautiful time of the year. But you're not here to talk about the greenery here in LA. Well, at least not that type of greenery, I don't think. Right? A different type of greenery. Let's make some cash tomorrow. Tomorrow morning, of course, is Wednesday, January the 16th. What is our news looking like tomorrow? We got the CPI reports, right, galore, right? PPIs and CPIs and everything I's. And of course, we talked about this last night on the newsletter, right? This is inflation, right? Consumer prices, producer prices, it's inflation. And anytime we get inflation reports, especially all of these reports, we know currencies and we know gold are definitely going to be on our radar. So keep your eyes open for gold and currencies early in the session tomorrow morning. As we go later in the day, we get the retail sales report here at 8:30. That should be the big news for tomorrow morning. If you're joining me tomorrow in the trade room, we open up at 8 o'clock Eastern time. And of course, we'll have a front row seat for that retail sales number. If you're an oil trader, don't forget tomorrow is a Wednesday. I know, wah, wah, wah. 10:30 Eastern time is that weekly inventory report. Now, I know you guys like to do some gambling, but you know what? I'll tell you, I'm not a big fan of gambling. I'm not a big fan of trading during major news reports, especially during that weekly inventory report. So you're more than welcome to gamble away your hard-earned cash. But if you're like me and you really only want the best of the best opportunities on Wednesday mornings, cut it off around 10 o'clock Eastern time. You'll find on Wednesdays, crude oil gets pretty nasty after 10 o'clock, and then really it's anything can happen after that news comes out at 10:30. I will look for more trades on crude after 10:45, but oftentimes the market is so chopped up by then, you can't find very much. So early in, early out tomorrow on the oil. And then I know I said the retail sales is the big number tomorrow, but we might just see a little bit of afternoon delight here from the beige book, that 2 o'clock Eastern time. Remember, the beige book, these are the meeting minutes, right? The notes from the last Fed announcement. Remember the FOMC announcement every, right, or 8 times a year, right? The Fed meets together. That beige book, those are the notes. And remember, we keep hearing lots of reports this week from Fed speakers. We had a whole slew of them this afternoon who said they're probably going to kick those interest rate hikes down the road a little bit till later on this year. That should be good for equities. That should be good for oil, should be bad for gold, and it should be bad for the currencies if we continue to see more dovishness, right? Keeping those rates nice and low. Hawkishness is high rates, dovish, of course, being low rates. I don't usually like trade in the afternoon, but when I've got a report like this tomorrow, we might just see some great opportunities just before, right, the closing bell. So big news tomorrow morning early if you're in London or in Asia, right? Definitely check out the CPI and PPI reports there. Of course, retail sales tomorrow if you're with us tomorrow in the trade room. Inventories at 10:30 for all you crazy oil traders. And of course, the beige book tomorrow at 2 o'clock Eastern time. We might just get that great opportunity to trade into the closing bell tomorrow morning. All right, speaking of tomorrow morning, let's break this thing down here. Let's break this thing down. What's our plan here for tomorrow? I got crude, S&P, Nasdaq, gold, and euro. Let's start off here tonight on this oil market. We've got 3 big clues on the chart tonight. First big clue has to do with momentum, right? Bull momentum. You know, momentum is the most important word in the trader's vocabulary. It really is. Right now, momentum is bullish. When I have a bullish momentum, it tells me to try to buy at support. A bull market always tells me buy at support. Now, where can I find some great support levels? I'm glad you asked. The next big clue on this chart is this trading range. Now, of course, what does a range tell me? A range tells me that I want to buy low, I want to sell high, and I want to try my best to avoid the middle. It's not always easy, but I try to avoid the middle. Now, we already know it's a bull market, so selling off the high probably not going to be the most reliable thing in the world. I'm going to give you some options to trade reversals a little bit later on in this video, and you could apply that right to this market tomorrow as well. But what I really want to do is I really want to buy this low, right? I really want to buy the low of that trading range. At the same time here, I can also take that trading range, I can copy it and paste it up. That will create resistance. And I can copy and paste it down, and that will create a level of support. So if we're in a bull market right now, when I want to buy at support, yeah, that range expansion level down at 51.25 is going to be a great place to look. We got one more clue on the chart tonight, that is the hidden channel. If I take this first high, connect it to the last high, draw that trend line. You can see that little test right there. Beautiful touch, beautiful touch. That tells you that's what they're using. And then bring it up off that low. And man, look at those lows. A gorgeous, beautiful hidden channel there, right? That hidden channel tells me that's a level of support. And so boy, oh boy, we can combine the low of that hidden channel support along with the low of that range support. And of course, that's where our battle zone, and that's where I want to be a buyer here for tomorrow. So let's put this plan together, right? What if we pull back? What if we go sideways? What if we go higher? Right? What's the plan here for tomorrow? Well, first of all, what if we pull back off these highs, right? One thing I'm looking for right now is if we do pull back, I want to be a buyer, but what's the best setup to be a buyer? I'm going to draw a trend line coming down off these highs. This creates what we call a two-legged pullback setup. I'm going to try to use that trend line now to buy off of that low. We call this a two-legged pullback pattern, a 2LP, and that will be one of the best possible setups waiting for tomorrow if we get that pullback. Another setup I'm watching here for tomorrow, right, if we get the pullback, let me zoom in a little bit closer here on this. Another setup I'm looking for tomorrow would be what we call a failure setup. So again, if we do pull back here, what I'll do is I'll wait for the sellers here now to try to sell off of the moving average, right? Let those bears try to sell that pullback. Once I see those sellers fail, or once I see it begin to start failing, I'm going to look for that nice strong signal and look to buy as it now starts going higher. I want to buy right into the stops of those sellers. Then I'll look for that rally going higher. Don't chase it here, right? Don't chase it. We'll look to get long as they fail. Don't chase the move higher. I don't want to buy high in a bull market. I want to buy low, right? Isn't that the rule of thumb? So what we want to do, we want to wait for that pullback now and look to buy the next pullback. That will typically get the moving average coming around, right? And we'll buy that next pullback, right? So we've talked about two-legged pullbacks. This now adds on the failure setup, right? And of course, that pullback setup. And don't forget, guys, if you want to learn all about the two-legged pullbacks, the failures, the pullback patterns, and everything in between, I have a great resource for you. I'm going to put a link up here in the upper right-hand corner for my free trading class. And that free trading class will teach you not only my favorite patterns, but it will teach you what I call my three-step strategy. You're going to love that three-step strategy. We'll talk more about that as we go here tonight. But definitely grab that free course. It's linked up in the upper right-hand corner. And then, of course, I'll also put a link right below the video tonight on our blog with a big red button right below the video tonight. Grab that free course. You will not be disappointed. And what a great price, right? Free $99. So we got a good plan if price pulls back. What if the market keeps going sideways here? What if we don't get much of a pullback here? What if it keeps going sideways? If it keeps going sideways, not much changes, but now we want to implement the two-try rule. Now we want to buy below the low, right? Again, we still want to buy low here in a bull market. And I'm looking for that one try. I'm looking for that two try. Let those bears try once. Let those bears try twice, and then I'm looking for that rally going back up into that range, get that nice strong signal candle, and we can buy going back up into that range. The two-try rule applies to trading ranges, and of course, if we get that range, if it does continue going sideways, we'll look to buy off of that range low. Now, what if price keeps going higher here, right? What if we don't get a pullback? What if it goes running higher here without us? Then what? Well, if it runs higher here, then this will not be a double top, which means we will not have a range. So if we do still keep going higher here, right, not much changes here, guys. Now, though, if we don't pull back, I'm now going to start looking for a different pattern. Now I'm going to look for that always attractive trap channel combination. I'm going to use one of those prior swings, try to line it up right with the low of that hidden channel. And of course, always love to incorporate traps. Traps, of course, rely on those prior swings. And you want to see that nice, strong signal coming off of the low of that channel. Again, we call that a trap pattern. The bottom line is, if it does keep going higher here, I'm still waiting for that pullback. And when I get the pullback, I'll look for two-legged pullbacks, failures, right? And of course, trap patterns coming off that low. And again, you'll learn all about those by grabbing that free trading class below the video tonight on the blog or up in the upper right-hand corner, right, if you're on the YouTube channel right now. Let's keep going. Oh, one more thing. Tomorrow's a news report day, right? So don't forget 10 o'clock, right? Two fives, right? 10 o'clock, right, on oil is the cutoff, at least for me, right, because that'll give you the best reliable setups. But how do we reverse? What does a reversal look like? Well, first of all, a reversal, and you got to pardon the term on this. I know it's really original. I really should copyright this term, right? Or trademark the term. It's called a 1, 2, 3 reversal. Aha, see what I did right there? Yeah, I know it's obvious. It's obvious. 1, 2, 3. I never said I was much of a original guy here, right? You know, trading most of trading is learning other tactics and applying it to yourself. Anyways, I digress. What does the 1, 2, 3 reversal look like? It's 1, strong move against the trend. It's 2, pull back to the moving average, and it's 3, strong move off the moving average. That's why I call it, I know, very original, 1, 2, 3 reversal. Right? Now remember, once you get that reversal, and I'm not trying to sell that pullback. If you try to sell that pullback, you're running right into the same problem that sellers had here, right? Look at that pullback. Very similar. Okay, so you can't just rely on a strong move off the high for this thing to reverse. It's got to hold that reversal and run. Once we get it, mark up that low. That creates a key level of resistance to sell. But most importantly now, I can mark up the new channel, and I can combine those two now for what is a very reliable trade. Okay, very different trade, right? That first one is probably a 30% winner. Second one's more like a 75 to 80% winner if you draw the channel correctly. Now, again, that would be a 1, 2, 3 reversal that would probably come, though, after that news tomorrow. Right? Sometimes that before the news. A lot of times though on Wednesdays, the market will sit quietly right in a tight range here. So watch to fade those breakouts. Buying the low here tomorrow on the oil. Oil is looking pretty good here. Let's keep going. How about the S&P? Yeah, S&P, bull market, right? 3 big clues on the chart tonight on the S&P. First one is bullish momentum. What is bullish momentum tell me to do? It tells me to buy at support levels. Now, where can I find some good support levels? That brings me to clue number 2. The second clue here tonight is to find that trading range. Now, this range is right in the middle here, right? So I take that range, I copy and paste it up, that creates resistance. I copy and paste it down, that creates support. It's a bull market into a range. What does a bull range tell me? Buy at support at the low of that range, right? So right down here, right? That's what that range tells me. We got one more clue though. The third big clue in this chart tonight, right? And it is a big clue, is that support trend line, right? Support trend line allows me to buy nice and low. And as you can see, it's going to include the low of that range. So that support trend line is really a very attractive area for those buyers tomorrow. All right, so now that you know the basic idea behind this, let's dig our heels in here, right? Again, it's a bull momentum, so I want to buy at support, which means look where we are right now. Not a great spot to be buying up here, is it? No, it's not. Not a great spot to be buying on the S&P right now because we're not buying at support. We be buying at a level of resistance. So what I want to do is I want to buy at support levels here. If I remove that channel, this will really make it easier for us here if I move that channel. Right now, how do I buy at support? Well, just like we talked about on oil, I've got to get this market to come down off this high so I can buy off of that low. Now, what would it look like to sell off the high? It would look a lot like this pattern right here. Now, watch how this pattern sets up. So if you want to sell in a bull market, obviously it's lower reliability. So I always tell my clients, if you're going to go counter trend, if you normally trade, say 4 contracts, trade 2, right? Cut the contract size in half because it's not going to be as reliable going against that trend. But follow along here. We go up, we pull back, we go up, trap, and down. Okay, now look at that little pattern I drew on there. What stands out to you? First thing is the 2 try. The buyers try once, the buyers try twice. Second thing is a trap high. That trap is always the money maker, and it's the safest way. Trap patterns are awesome patterns, but one of the many ways we use a trap pattern is to trade a reversal, right? So what's the best way to get in on a reversal? Trap setups and that 2 try, right? two patterns that make it easy for a reversal. So if I want to sell off this high now, right, I'm going to have to look for the same basic thing. We go up, we pull back, we go up. I'm going to want to see another trap up here to sell off of that high. The reason why traps are so effective in this is because you're selling before the buyers have a chance to defend it. Because the buyers aren't going to buy up here. None of the professional buyers are going to buy up there. Those are all going to be sellers up there, or buyers becoming sellers taking profit. The buyers are waiting down here. So you don't want to buy, you don't want to sell low, right? You want to sell high. If you try to sell low down here, you run the risk of being stopped out as it tries to go higher. If you sell high up here, you'll at least be able to take your first profit target, get rid of that risk. And then if you're wrong for the rest of it, you're wrong for the rest of it. At least you're not taking a lump right on the chin in the process. So we're going to be a trap here, right? So it's 1, it's 2, and back down in. So that's how I would sell off the high of this range. Now, let's say we go back down to the low here. Okay, look left, right? Look left here. Watch how they go 1. They pull back to the moving average. They sell off the moving average. Then we look to buy into those failures going higher. Now, look for that same type of pattern over here. I want to see a pullback. I want to see the moving average come over. I want to see those sellers try to sell off the moving average. That tells me now where their stops are, and I can now buy right into those stops. Now, again, go back over here again, right? We get the 1 big move down, the pullback, the failure, and then what happens next? It pulls back to the moving average again. That's the next setup, right? Pull back to the moving average again. That's the next one right there. So now, right, we've got that failure setup into that pullback setup, right? We talked a lot about this on oil, same basic pattern, but I mean, how easy is this? You can easily see the example on the left. That's exactly what we're looking for on the right. All we need now is Father Time to give us a couple more candlesticks, and we can buy off of that low. Now, what if we don't pull back, right? What if we go sideways here? What if we end up just stuck up here? You know, we heard today from Fed chair, from not Fed speakers, but some Fed voters, right? Some members of the FOMC, and it sounds like they're kicking that rate hike can a little bit later in 2018. This could keep going higher, right? The more they push back those rate hikes, the more people keep on slapping that buy button on these equity indexes right now. That's probably why it's such a bull market today. Bottom line, though, is if we do stay stuck around these highs, then it's going to be a 1, it's going to be a 2. Let those sellers try once, let them try twice. We'll use the 2-try rule to buy below that range. And if I can, I would love to use that trend line coming in off of that low. That would be great. Now, one more thing. What if it goes higher? How do we trade it? What do we need? Well, first of all, I've got to break free of this range expansion. In order for me to be confident to buy this market, I've got to really push through this 2615 area. I've got to get through that measured move. I've got to get through it. So what I got to do is I want to see it up and really blast, right? Big blammo going higher here. I'm going to mark up that high. I'm going to mark up my new channel, find that channel low, and then now we look for that pullback and we can buy off the low of that channel. Again, though, make sure you get that nice, strong break higher because you won't be able to trust it if you don't. And then don't forget, right, what does it take for a reversal? Well, in this case, it'd be a reversal and a breakout. I've got to get below that key trend line, right? I've got to get below that trend line. Even if we get a nice strong move lower here, that trend line is still there, and I'm still going to look to buy off of that low. So I've really got to get through that low. I got to hold that trend line, and then I can start looking seriously about being a seller off of that channel high. It's going to take some time on this because you really can't go out and you can't sell a pullback right now. It's way too bullish. And with everybody talking about rates being hiked later on in the year, right, this thing could easily stay right up around those highs. Every time it pulls back, people buying it right back up. So you're really going to be careful right now. Not the time to be trying to call a top on this market because it definitely has a very bullish feel to it. Now, let's keep going. How about some Nasdaq? Yeah, Nasdaq, very similar to the S&P, but we got some really big difference here. 3 big clues on the Nasdaq tonight. Clue number 1 is that bull momentum. What does it tell us? Buy at support. And remember, buying at support, one of the keys to buying at support is trying to find a way to get the sellers to get stuck so they've got to exit for a nice big short covering rally, right? We'll talk more about that in a moment. Now, next clue, second big clue is a trading range, right? There's my trading range. I take the trading range, I create my support levels below, right? And I create my resistance levels above. So we're right at that level of resistance right now, aren't we? Yeah, difficult to want to be a buyer up here. And because we're so bullish, again, you're more than welcome to take that short off the high. But remember, right, it's that trap. It's that 1, it's that 2, it's that trap, right? Traps are always going to be the most reliable way to get into a reversal because it allows you to sell high. And most importantly, it gives you kind of a freebie because those buyers are not going to be trying to buy very high. They're going to want to buy low. By the time those buyers come back in, try buying down here, you've already got your first target. We talked about that at the beginning, right? So again, be careful on that, trying to sell off that high, wait for the right pattern. The third big clue, now we're ready for 3, right? Third big clue here, mark up these 2 highs, mark up those lows, look at those little beauties right there, the happy little wicks, right? Channel my Bob Ross here tonight, right? Happy little wicks. It hits the midline right there. That is a gorgeous, gorgeous hidden channel. Now, what is the one thing that stands out in this hidden channel? Is there anything on this channel that stands out? What do you think? If I look at that channel, what's the first thing that comes to mind? If you're a client of mine, really wide, right? It's really wide. Now, what does a wide channel tell us? It tells us momentum will build. What does that mean? It means that when I pull back off this high, that's a real sharp pullback, right? That's a real deep pullback. When we get that pullback now, what I want to switch my focus to now not buying, but waiting for the sellers to swing once, swing twice, and then once they throw the bat back in the dugout, right, that's when I'm looking to be a buyer going back up. I want to let those bears try once. I want to let them try twice, right? Let them try once, let them try twice, and then we can be the buyer going right back up, right, to retest those highs. Wide channel, wide channel. That wide channel tells me that momentum is going to build, right, when it comes back down to the low of that channel. So it's a bull market. Got a bull range, got a wide channel. What's the plan look like here for tomorrow? I want to buy down around the low of that channel. Again, you can look for that to try with the trap to get that short coming off that high. As we come lower, keep an eye out for that 2-legged pullback pattern up and over using that trend line as support. We talked about that earlier, right? Keep an eye out for that failure pattern. Nice strong move down, right? That failure off the trend line, off the moving average, then it's a failure into a pullback and back up, right? We talked about those patterns already. And again, if you want to see hundreds of examples of those patterns directly from our trade room, grab that free trading class in the upper right-hand corner or get that big red button on the blog here tonight. And I'll see you inside the members section at schooloftrade.com, and you can learn all the details of this trading strategy. And then don't forget, if we really, right, if this thing just collapses back down, right, look for that nested 2 try. Let them try 1, right? Whiff once, right? Let them try twice. And then once they try twice, now I can be the buyer going back up, right? Because that wide range, that wide channel, that momentum will build once, twice, and then right back up we go, back into that trading range. What if we sit sideways here? Right? What if we sit sideways here? What if we just chop around going sideways? Then what do we do? Well, at that point now it's a range. I can find that support level now below the range, and I can use that support level with the 2 try rule. 1, 2, and then back up 1 and 2. So if we do start going sideways, this will be a few hours from now, obviously, but if we do start seeing this market going sideways inside of a range here, right? I want to see 1, I want to see 2, and I want to see us right back up, right, into that trading range. What if we keep going higher? right? What if this thing keeps going higher here? If it keeps going higher here, I'm going to call this a spike in channel. And what do spike in channels tell us to do? Trap, 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 right? Look for those traps, get below those prior swings, right? Find those traps. If this thing just keeps on pushing higher here, again, a lot of people are thinking these rate hikes now are going to be on pause till the end of the year. That's good for the bulls, right? We might be trying to make a run all the way back up to retest those all-time highs again. Oh my goodness, do not tell that to those bears out there right now. I'm not saying that's tomorrow, but I'm saying this could definitely happen real fast here if they continue to push this thing down the road. Looking for those trap lows, right, to be a buyer off of those lows. And then last but not least, what does a reversal look like? I know, right? And all my originality here, right? It's the 1, it's the 2, it's the 3, right? That 1, 2, 3. Now, if I can get that strong 1, 2, 3 off the moving average here, I still have to worry about that trend line, guys. That trend line's still going to be there. So what I'll try to do is I'll try to use that trend line now, right, as a level of resistance, and we can sell it back down from there. The key is, obviously, we got to get this party going lower, right? It has to be very, very obvious here, not just a deep pullback, because if all it took was a deep pullback, well, what's the plan right there? So you can't just sell a deep pullback, because a lot of times those pullbacks, sellers will try to sell into it, they'll fail, and that is exactly what I'm looking for tomorrow at the low of that trading range. Nasdaq looks great. Let's keep going. How about some gold here right now? Over to the yellow metal. Yeah, same old story here on gold, right? Same old story. We got a range-bound market again. If you watched last night's newsletter, you were locked and loaded to perform on the GC today. Really great trading on gold right now. It's a little bit slow in the U.S. session, but as long as you're getting to it early, buying low, selling high, it really is. Like I said, if you follow the plan from last night, you had a great prep for today. 3 big clues on the chart. One is a neutral momentum. We got some bears, we got some bulls, we got some bears, we got some bulls. It's pretty much balanced right now. That tells me I can buy low, I can sell high. It's a trading range. So of course a range tells me buy low, sell high. And most importantly, the second clue, right? What does a range tell me to do? Use the 2-try rule, right? We go lower, 1 try, 2 try, back up. We go higher, 1 try, 2 try, back down. We go lower, 1 try, 2 try, back up, right? Keep buying low, keep selling high, and keep using that 2-try failure pattern. Also, don't forget, right? Stay away from that middle. We're right in that middle right now. I don't want anything to do with the middle of that trading range. Next up here, the third big clue is that resistance trend line, right? If I look left, there's actually a couple of resistance trend lines here. The one that I think is most important for tomorrow is this bad boy coming right down off of these highs. If you look closely, there's actually another one right there, but it's not that actionable, to be honest with you, right? That trend line's not really going to help me out very much. I'd rather use that larger trend line so I can focus on selling up off of that high. So that trend line is obviously in our on our radar here tomorrow. It's a resistance trend line, and of course I'm going to try to use that trend line now as a key level of resistance. The goal for tomorrow is, of course, stay out of that middle. Wait for it to go down to buy the low, go up so I can sell it back down again, right? I want to go up, 1, 2, back down. I want to go down, 1, 2, back up. The hardest part about a range-bound market is sitting on those hands right in the middle. So if it does end up going sideways here, you just stay patient and wait, because it will almost always give you that breakout. And I'm telling you right now, that breakout is going to feel like it's never going to stop. Wait for those sellers to try a second time and then buy it right back up. I mean, how many times now have we seen these real strong moves? They can't hold the pullback and they go right back in again. Real strong moves, they can't hold the pullback and they go right back in again. Big strong moves, you get the point, right? So we want to make sure we 1, 2, and sell, that 1, 2, and buy. Stay away from that middle. Now, speaking of breakouts, what does a breakout look like? The 1, 2, 3 breakout would be a strong move up. I want to get through that trend line coming down. right? Strong move up, hold that pullback and go. Now, I know what you're thinking right now. Really, I can't buy that pullback. You can, but the problem is that you're still dealing with that range expansion level, right? Take that trading range, copy and paste it up, and you're still dealing with that range expansion level up there. It's not going to make it any easier. It's not going to improve your reliability. What you really want is you want to get through that range expansion. Then once you get it, mark up that high, mark up your new channel, and then look for the buy off of that low. I'm not saying it's easy. It's not easy to wait patiently for these markets to make the move for you, but it is so important because, again, how do you know what to trust, right? How do you know this one's not going to be the breakout? That's the problem, right? It's very easy to say, well, when we see a big strong move, I'll know it, and it's going to look really strong, and I'll buy. Well, okay. I mean, look at all these big strong moves. It doesn't work very well in ranges, so you got to wait for that 1, 2, 3, get that strong leg through, right? If this would have held and run hard here, that would have been a breakout. And we could have easily marked up that low, mark up that high, and try to buy off that pullback. But until that happens, I'm fading those breakouts, buying low, selling high, and avoiding those middles. How about some euro here? Now, I'm gonna throw the spitball here on this euro tonight. The euro is never heard of a spitball, huh? Right? My old fancy dancy spitball. I'm kidding with you. We got a little bit of a curveball tonight on the S&P. On the euro, right? Euro. First of all, 3 big clues. One is the bear momentum, right? That bear momentum. What does it tell me? It tells me sell at resistance. And most importantly, sell at a resistance level that that can catch the buyers, right, on the wrong side. The best levels of resistance, right, like we saw right here, take those lows, up that high, right? That's a major level of resistance. The best way to trade off a level of resistance is to let those buyers think they've got it beat, and then sell into their stops, right? That's why I say, when you have a bear market, find resistance, but don't just sell at resistance. Find an area where you can make the lives of the other side of the market a little bit miserable, right? Is you pick their pockets, right? So the easiest way, or should I say the most effective way to use support and resistance is not just to buy and sell it, it's to buy and sell it with a pattern that allows you to catch the opposite side, right? Either getting too aggressive or not trading, right, by the overall momentum of the market, right? That's a good example right here, right? We have those buyers who obviously tried to buy that pullback, but they're doing it right into resistance. I want to sell at resistance. I want to catch those buyers looking in the wrong direction. Next thing here is the support trend line. Now, this might be the biggest clue here right now, right? That support trend line. What does a support trend line tell me? It tells me that, first of all, I don't want to sell into it. Second of all, I want to use it as resistance to sell. Okay. Now, oftentimes, right, when we see a trend line, support trend lines are really, really important in bear markets because, again, like this one back here, right? See what happened? They went down, they used it, and back over. That's pretty much what we're looking for here on the euro, right? But here's one you want to keep an eye on. Sometimes when a market really rolls lower, it'll pull back and do one of these. And it will give you almost this flat trend line. See, right now in the euro, we've got this right now, right? We've got this. And a relatively steep rising support trend line, I can get below it and use it pretty easily. And I can still get a pretty good reward as we go lower back to retest that low. But watch closely here. If this trend line is a little bit flatter, like this, see, now that doesn't work because now I've got to get right here to trade it. That's really tight. That's really tight. This is not a very big profit that I can make because the target's right there. Okay? So just kind of keep that in mind as you look at rising support trend lines. And why is this important? Because these types of scenarios where that rising support trend line is almost flat, these almost always lead to reversals, right? Almost always lead to reversals. Okay, now this one's not as dramatic, right? This one's a nice steep one here. So we definitely have potential to use this to sell high. I just wanted to kind of show you that little trick, right? If it was a little bit flatter here, right? If it was a little bit flatter like that, that would almost be a guarantee of a reversal. Okay, almost, because there's never any guarantees of market reversal. I have seen those types of situations break through before. It's just usually nobody wants to mess with that stuff. So keep an eye out for that next time. Okay, that's not in play right now. Right now we get that rising support trend line, and I can use that rising support as resistance on the opposite side. Okay, now I think that's the biggest clue, but there's one big clue here. Maybe the biggest big clue, right? The bigger the biggest, right? The measured move. Now, measured moves, you may know these as AB equals CD patterns, right? A to B equals C to D. Now, if you're a client of mine, what stands out to you right now? What's the first thing you think about when you think about that measured move? They missed it, right? Like big time, right? And look at this. They tried once, they tried twice, 3 times, 4 times, right? Swing and a miss, swing and a miss. Now, what does that mean? Why is it important? Well, because in trading, it's oftentimes what doesn't happen that is the most important clue, right? It's not what does happen, it's what doesn't happen, right? You know, we didn't see the buyers reach double top. We didn't get the 1, 2, 3 reversal. We didn't see the full rotation. In this case, we didn't get the measured move completion. And you can clearly see they tried, and they tried, and they tried. Something's wrong. Something's really wrong, right? Markets don't do that very often, right? If they missed the first 2 tries, they would come up, they would trap, and they would bury that measured move, right? A market that strong, they would bury this measured move, okay? That's a big clue. So now combine these two, right? We have this rising support trend line, which again isn't really a dagger in the heart for the bears, but it really is a big, big clue. It might lead to a reversal if these sellers can't get this thing back below it and then use it on the opposite side. The big clue, though, is when you combine that with the fact that they missed that measured move. Something tells me here, a little voice in my head says, we're going right back up into that range that we talked about in last night's newsletter. You know, ranges, that nasty range right there. We had that big CPI report this morning, right, in Europe, and price just tanked, right? And it was, again, we talked about this last night, CPI numbers, watch the euro, that's what happened. Well, now we're starting to get a feeling here right now that this might be backfiring, and we may not get that move going much further. So, what's the play here? How do I buy it? But more importantly, how do I sell it? Well, first of all, we sell it by getting back below that, right? Below that trend line, and then using it, nice big strong reaction to it as a level of resistance. Now remember, if we don't get that pullback, what's the next step here? If it goes lower and we don't get that pullback, what do you do down here? You don't sell low because that measured move's right there. Whenever we're running out of open space, what do we look for? We look for traps. Whenever we're running out of open space, we look for traps, right? So we'll get a trap high, a bull trap. Look at that trap high to finish off that move. Okay? Those are the 2 selling opportunities I'm looking for here tomorrow. And then don't forget, if we do happen to end up back into this range and we end up rolling around inside of a range, this could happen, right? A little bit of a range down there. If we go back into the range, we chop around, same thing, 2-try rule, 1, 2, and we'll sell back down. Let those buyers try once, let them try twice, and we'll sell back down again. So those are the key components we're looking for here to be a seller. Now, how do we buy this market? Most important thing is I want to see buyers hold this pullback. If we can get buyers to hold this pullback and rally higher, right, now I have an option to be a buyer. Now, what I'd really like to see is I'd like to see a trap low. I'd like to get this market moving higher first, then a trap. We talked about this earlier. I promise we talk more about it. I'd like to get this trap low because remember, if I can buy low, I'm not buying high where you're going to see more sellers. If I try to buy high when the market's reversing like this, what's going to happen is going to pull back. And if I'm buying high and the market starts pulling back against me, what happens now? Yeah, my stop's going to get hit. And my stop's going to get hit right when that trap sets up. I'm going to get stopped out of that trade, and as I'm drowning in my sorrow, I'm going to watch this thing rally back higher again. So instead of trying to chase the market higher, focus on that trap low, right? Focus on that trap low. It doesn't matter where you get it. It really doesn't. Just get it before we run into that falling resistance trend line coming down here overhead, right? There's a big trend line coming down here overhead. There it is right there. Okay, so just get it before you get to that trend line. Trap, 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 right? Look for that trap. Where's my target on that long? My target is back up into the original range. And I hope we get it. That'll be a beautiful trade and a nice easy runner for us, because a short covering rally, right, will kick this sucker right into gear. What a great session tonight on the newsletter. I hope you learned a ton. I hope you earned a ton with it. And I hope I'll see you tomorrow morning in the trade room. Don't forget, we open up every morning, 8 o'clock Eastern time, bright and early for me here in LA. And I'll see you guys top of the morning tomorrow. Don't forget, as part of my free trial, right, grab that free trial. That'll give you an invite to the trade room. It'll give you the free trading classes, right? And it'll give you a great front row seat of exactly what it feels like to be a client here at School of Trade. Check out our 3 levels of membership, our beginner, intermediate, and advanced classes, right? Hit me up on live support, right? And of course, don't forget, I've got toll-free phone, I've got email, I've got Skype, we got live support, whatever the easiest way is for you to reach out and get more information. Guys, I want to thank you so much for being here. I apologize a little bit late for the video tonight. I'm still working out some of the bugs here with our new format for the nightly newsletter. What do you think? Give me some feedback. Thumbs up, thumbs down. What do you think? Drop me a comment, send me an email, and hopefully I'll see you tomorrow in the trade room, 8 o'clock Eastern time. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.